Gents, good morning to you. David, first to you, your reaction.
Well, I think what we've got is a moderation in the US economy, both in terms of growth and inflation. Inflation it's taking its sweet time coming down, but we still think it's a downward trend. And I think, the reason for the market reaction is that we didn't get an upside surprise. So we've now had three reports. We've had the jobs report, then we had the consumer sentiment report, and now we've had the retail sales report, and they're all saying, overall things are moderating here. When you look at the JOLTS number, things are moderating. We've got fewer job openings. So it looks like the economy is just easing itself into sort of a 2% corridor of 2% growth, inflation gradually coming down towards 2%. And that's very good news. And I think the good news is that we didn't get another upside surprise in CPI today.
Does that whisper of a July cut grow a little bit louder after this, or is July still too soon?
I don't know if the whisper, it's already been a whisper. I don't know if it can become less of a whisper. I think it sort of stays where it is, which is to say, around 25%. I think that's probably reasonable. It doesn't go away, though. I think that's the important thing on the back of this. So I think it could probably still linger. But I think as a practical matter, it's probably going to get pushed a little bit. And I have no challenge with that. In fact, one of the things that I've been sort of critical of Powell when it's been mostly deserved. There's
no pushback around this table.
But recently, I think he's done a good job with the narrative, right? Like I think after the last presser, and actually the presser before, where he said, hey, look, we're not going to overreact to a couple of, sort of strong string of inflation reports, just like we didn't overreact to a really soft string the last go around. So I think that this to me is a chair who wants to cut. I think that, and you can easily see one, and I think if he has the opening, I think he'll do two. And I think data like this, if it persists, I think that'll give him that opening. And sorry, I'll make this one last point, and I think
Sure.
David rightly highlighted this. If you look at that control number on retail sales, it was pretty weak. And again, no one's making the case that we're sort of falling off a cliff here, but I think things are slowing down. And that would be consistent with the Fed having the ability to cut.
We were just speaking with Ed Yardeni, and he doesn't necessarily have the same kind of sanguine outlook that you do with respect to Jay Powell, because he says, honestly, the consumer is strong. That, yeah, there was weakness in the control group, but as Mike was saying, it has to do with auto sales. It's not the sort of broad-based people not going out and spending things. Yeah. So at what point, David, do you look at that and say, you know what, things are fine now. Why the rush to cut? I know you are in the please cut now, and you should have already cut camp. But why is it not that we see things are just fine and you should stay in here and only a cut would turbocharge a rally, which is exactly the reaction we're getting today?
Well, I think you should normalize interest rates. I think the Federal Reserve for a long time has been trying to micromanage the economy with rates that got too low and too high. I think it messes with financial markets. And, the more the Federal Reserve tease off financial markets, the more financial markets sort of act like sort of babies here. You shouldn't have had this much of a reaction. But you get this reaction because the Federal Reserve is so sensitive about saying anything that might offend the markets one way or the other. When economic numbers are a little bit off one way or the other.
Isn't it fair to say their reaction function is set up for us to be hypersensitive to
yeah,
data?
I think markets have an overreaction function. That's
okay.
the problem, and so markets just overreact, and so the Federal Reserve you kind of have to expose the markets to normal policy. Normal policy is if the economy is doing okay, rates ought to get back to normal levels. And I do think, I don't think July, but I do think September is possible. It's there. And I think Jay Powell himself will actually make a decision as he heads towards this about whether he wants it himself. Because the one thing that we've seen about Jay Powell, which is very clear, is he wants to build consensus and he works hard and actually lobbying. I wouldn't say lobbying necessarily is the right word, but he does.
It's a good word,
but he does talk. I think it's amazing that he talks to all 19 participants at the FOMC meeting before the meeting and just, this is my view and so forth. And that's why he's been able to get so much consensus. So if he thinks that, look, let's get going on a slow rate cut cycle before the election, so we can, and let's get it going here, so we can't be accused of playing politics. I think he might well do that in September.
Tom, you seem eager to weigh in.
No, I agree. I think David is completely spot on. Look, I think this is just a recalibration cycle. This is not, people hear cuts, and I think that immediately conjures up the images of the Fed like getting aggressive. Like, we don't think that that's the case. We think that this is going to be a sort of a very modest reduction in funds.